Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the Dow Jones Industrial Average. All right, yeah, so the big drop today, ended up closing down 391 points. Oh yeah, and we're going to look at the bear and bull ETFs, and we're going to take a look at the S&P 500 and at SPY, so SPY. So the big drop today did put FASTO down here below 20, and as you can see, when the Dow Jones Industrial Average gets below 20, it likes to bounce, and so we'll see here, you know, it could have another day below that level, but most of the time, you can see there was the 2-day drop here in March with FASTO below 20, but generally you're going to get a bounce following a move like this, so it might be one more red day and then a bounce. The Dow Jones Industrial Average is already on a 3-day drop, and it's currently hitting the 50-day simple moving average, currently at 24388. It needs to bounce and get above that level, so keep an eye on that level tomorrow, 24388. If it gets back above that level, you could get a run back up to the middle Bollinger Band, currently at 2475. If that, or 575, if it fails to hold this 50-day simple moving average, that's going to signal downside risk, and it could retrace down here to this ascending support line and the 200-day simple moving average, which is the red line, currently at 23991. That is the downside risk. If the middle Bollinger Band and the 50-day simple moving average turn into resistance, then this symmetrical triangle pattern that's formed, it will come down, test ascending support, and then, you know, that's where it would likely get the next bounce. If it does get a technical bounce here, it has to get back above that middle Bollinger Band. There is a gap between low of day on Friday and high of day on Tuesday here, and so if it does get above that middle Bollinger Band, you would be looking for that gap to fill. Now notice that there is a bear cross here on ADX. You have minus DI, the red line, crossing over the green line. That does signal downside risk, and RSI dropped below 50. It was above 50 for a couple of weeks, for 3 weeks there, and then dropping below. That's a big signal that the chart is cooling down. So there's lots of red flags on the chart. There's also a PSAR bear flip. Notice the green dots were below the candles when the share price was heading, when the Dow Jones Industrial Average was heading higher, and then today the dots flipped above the candles. So that signals downside risk. You can see that this is when the last time there was a bear flip was right around here, and then there was a bear flip right here, and so you know, the previous you know, you had a bear flip right here. You know, it could be getting close to the bounce level now that it's down multiple candles in a row. We're gonna see also that there's bear crosses on MACD on both time frames. So you have the MACD line crossing over the signal line on both time frames, and that's another big red flag. So you have red flags all the way across the board here. You know, volume wasn't heavy, but it wasn't completely light either. It was average volume, as you can see here. You know, it was a pickup from the volume on Friday, but it wasn't big volume. You know, it wasn't like there was over 500 million shares or 800 million shares. You know, it was around the 400 million mark. So you know, average volume, big drop. It's all about that 50-day simple moving average. So what was in play was SDOW. This is the Ultra Pro Short Dow, and ticker symbol SDOW. So this goes up when the Dow Jones Industrial Average goes down, and yeah, call options were on fire today. They did really well. RSI is heating up above 50. You have a bull cross here on ADX with the green line crossing over the red line, and so it had been on it's on a 3-day run now. It's worked its way above that middle Bollinger Band and 100-day simple moving average at 1833. It needs to turn those levels into support, and then it's hitting the next key resistance level. That's the 50-day simple moving average at 1887. If it can break above that level and close above, then it could possibly run up to that upper Bollinger Band and test that $20 resistance level. If it fails to break the 50-day simple moving average and it drops back below the middle Bollinger Band and the 100-day simple moving average, that would signal that it's not ready to go, and it would signal more downside risk. Right now, this is the first close above the middle Bollinger Band since support broke back on May 7th, and so it's trying to get a new uptrend going, but if it fails to hold support, then that could prevent that from happening. You have a PSAR bull flip. Notice the green dots were above the candles. Now they flip below. You've got just average volume, and then you have a MACD bull cross, recent bull cross on both time frames. 12, 26, and 9 crossed over today. So everything's signaling that the chart's heating up. It just has to bust through that 50-day simple moving average. Now look at the 15-minute chart for SDOW. You can see it was heating up last week, and yeah, we were talking about it in the chat. I posted all these plays in the chat last week for the bear ETFs, because it was looking like there was danger at the door, especially with VIX. Futures was really hot on Friday, and so it was signaling downside risk, especially with the European markets under pressure last week, and Japan under pressure. You had a lot of signals were pointing towards possible dip for the market, and for the U.S. markets. And so the SDOW did close above all the moving averages on Friday, and so you can see here it's above the 200, the 300, the 50, and the 20-day simple moving averages. Closed right at that middle Bollinger Band level, and then today it pushed higher. It did close today at below the middle Bollinger Band. Okay, so that was a red flag at 1874, and so it was it was a tough call here at end of day after the big run. Do you keep riding this, or do you lock in gains? Closing below the middle Bollinger Band is a red flag that it could pull back and cool down. It has a really nice move on the daily chart, but it is hitting resistance. So if you see the 15-minute chart with that 1874, just make it even 1875 level. If that turns into resistance, you see it failing to break above that level, then the downside risk is it retraces down here to 1824 and tests the next key support level. So it's going to be real important that it gets back above. And then what you want to see if you're a bull is a break above this 1890 to 1895 resistance level. That's the high close in this white candle. If it can break above that level, it's going to signal that it wants to head higher, and then that's where you're going to see that possible run up to that upper Bollinger Band and test that $20 level. Okay, so tomorrow, if the markets do bounce, keep an eye on UDOW. This is the Ultra Pro Dow 30. This is it goes up if the Dow Jones Industrial Average goes up, and so as you can see, it dropped down. It's below 20 on RSI or on FASTO. You can see RSI dropped below 50, so that is a red flag. And the reason why I say that is you look over here when it was really bullish back here in January, you could see it was cruising above 70 on RSI, and then when it dropped below 50, that's when the chart really started breaking down. And so it was nice that it was above 50 here for a couple weeks, and then breaking down is a major red flag. It needs to get back above 50 to heat up. Otherwise, it could retrace down to that 30 level. Okay, and so right now FASTO is below 20. Just like the Dow Jones Industrial Average, it doesn't stay below 20 for an extended period of time, so you need to be on the lookout for a bounce. There was a bear cross here. You can see the red line crossed over the green line. That's a signal the bears are heating up. This was on a 3-day drop. Look at that big volume spike into the close, and so it looks like people were loading UDOW here for playing the bounce, and so people are trying to time the bounce here off of the 200-day simple moving average. And so the chart was really heating up into the close, and so there was a flip. People did flip sides. They locked in profits here, and then they flipped into UDOW, and so we'll see if it works out. It's all going to be about two levels in this chart. If it holds 85.23, if it stays above that 85 level, then UDOW will be in play for a bounce. If it drops below 85, then it's going to be the signal of more downside risk for UDOW, and then it'll be then UDOW puts or going long SDOW would be the play. But if it gets back above that 50-day simple moving average at 86.75, then that's going to be a signal that UDOW is in play for the bounce, and that UDOW call options are in play. All right, and then that would put SDOW puts in play. I'm not trying to get, I know that can be confusing, but yeah, basically if it gets above that 50-day simple moving average, then you're looking for a run up that middle Bollinger Band band at 88.42, and then it needs to turn that level back into support. You need to get back above that level in order to keep this uptrend going. It's at risk right now of breaking the uptrend that started back here when the middle Bollinger Band resistance level broke. Okay, so yeah, it stalled out at the 100-day simple moving average at 93, so it needs to get back above that level. So we're going to see if it can follow through. So take a look at the 15-minute chart for UDOW. You can see how it was dropping, you know, while SDOW was rising. This was dropping, and so you can see it did close bullish. Okay, it got above the middle Bollinger Band. That's always the first step that we look for, and so if it can stay above 85, 86, that's the first step of getting this bounce going, getting the reversal. And what you're looking for, you know, you can use that level as your mental stop loss level, and if it drops below, then you don't want to be holding. If it holds, then you could try to play the run up there to that 50 simple moving average at 88.36. That would be the next key resistance level to break. Notice how that 88 level is lining up with the middle Bollinger Band on the daily chart. And so yeah, so you can see the flip here where you had the big push and then the close below the middle Bollinger Band. That's signaling this is cooling down, and then the big drop, and then the close above resistance is signaling this is heating up. And so now we're going to see if tomorrow's train is going to be UDOW. You know, we'll see if they can get it going. If it drops below that middle Bollinger Band at 85, you know, you want to stay with SDOW. SDOW will get back above that middle Bollinger Band if that happens. Okay, let's look at SPX. This is the S&P 500, and so yeah, this is another big drop. It didn't get down below 20 on SDOW, but it is hitting that bounce level. Okay, so you know, if this does drop, if the S&P 500 does drop below 20, you know that it generally does bounce below that level. You have RSI now below 50. That's a red flag. It had gotten above 50. Now that's dropping below. That's your signal the chart is cooling down. You have the bear cross on 80X. You have the PSAR bear flip. So everything's pointing to negativity here. You have the MACD bear crosses. So everything, you can see how the 8, 13, and 5, the black line, the MACD line crossed over the signal line before the 12, 26, and 9. And so that's this is an early signal. And so it's just a signal that the chart is the bears are taking over, the run's cooling down, and that the chart is under pressure. And so today there was a close below the 100-day simple moving average, the gold line, which notice how all these candles were holding as support. And then today it finally broke below with the gap down. And it also closed below the middle Bollinger Band. So it's all about 2,700 for the S&P 500. Above 2,700, and then it, you know, and get above that 100-day simple moving average at 2,711, and then it could, you know, continue this, you know, it was in a strong consolidation sideways pattern, but you know, it could get back into that channel or try to push higher. But the bottom line is if 2,700 remains resistance, it's going to signal downside risk. And then you have the support level is the 50-day simple moving average at 26.72. It has to hold that level. Notice how it's lining up with descending resistance on the former this symmetrical triangle pattern. And so right now it's above resistance. If it fails to hold 26.72, then it could drop back into that former pattern. Notice how you have ascending support now is converging right here with the descending resistance, and so if there was a drop below the bottom of this triangle pattern, currently at 26, what is that, 2650, that's going to be a major red flag. You know, if it dropped below here, you know, you have the 200-day simple moving average. That would be that would be the next support level at 26.35, and that's where it's been bouncing off of. What would happen is if these levels broke, let's say it was just major, you know, bad news, everything was going negative, you know, they really sold it off, then you'd be looking at 25.60. It dropped down to that 300-day simple moving average. I don't think anybody's thinking that it's going to get that bad, but you just have to follow the charts. You know, this could totally bounce, get back up above this channel tomorrow. You just never know. It just seems like the Italy thing is, you know, that's weighing on the markets. There's a lot of headwinds right now. Let's look at the SPXS. SPXS chart, and so this is the bear 3 times for the S&P 500, and so it closed up 3%. You have RSI at 51, Fasto at 70, you have the crossover on 80X, and so this had the PSAR bull flip. You can see the candles were above. This closed above the middle Bollinger Band. If it can hold that level at 27.22, it could get a new uptrend going. So this is short. This is the bear, S&P 500 bear 3 times, and so it's you know, gonna follow. It's gonna go up if the market's going down, if the S&P 500 is going down, and so it hit that 100-day simple moving average at 27.72, and it failed to break. It needs to get above that level, and then above the 50-day simple moving average at 28.27 to head higher. If it fails to break those levels and it drops back below the middle Bollinger Band, it'll be a signal that it's not ready to go. You know, it's signaling that this is the move where it wants to possibly push through, but you know, they sold off that 100-day simple moving average. It does have the MACD bull cross in the 12.26.9 today. It had already crossed over on the 8.13 and 5. If you look at the 15-minute chart, you can see it sold off as well into the close. It had that really strong uptrend. You know, it made this intraday double top in this 27.80 zone, and then it closed below the middle Bollinger Band. It needs to get back above that level that's currently at 27.57. If it can get back above and then break above that 27.80 zone, then it could head higher. If that 27.50 zone remains, you know, 56 zone remains resistance, then it could possibly retrace down here to that 50 simple moving average at 27. That would be the next big support level to hold below. Notice the big volume into the close. So they took profits into the close here after that big run, and we'll know whether or not it's going to be in play tomorrow for more upside if it gets above that middle Bollinger Band. If not, keep an eye on 27 for technical bounce. Let's look at SPXL. It closed down 3% today. This is the S&P 500 bull 3 times, and so this is the this is under pressure. So this is going to move 3 times the movement of the S&P 500. You can see this was down 1%. So SPXL is down 3%, and so it's 3 times the move. And SPXS was up 3%. And so they're both 3 times ETFs. And so what you have here is this exact same setup, you know, below 50, hitting 20, bear cross, and then you've got it closed below the middle Bollinger Band. It needs to hold the 50-day simple moving average at 42.52. If it can hold that level, then it could get it back, you know, possibly get back above that middle Bollinger Band at 43.66. That's the huge level to hold. It's been trying to break the 100-day simple moving average, the gold line, basically at $45, and that's been the big resistance. Once it gets above 45 and turns it into support, that's when it can head higher. Right now, it's pulling back. If it gets below that 50-day simple moving average, you can see the 200-day simple moving average is just below at 41.89. This is a big support zone between 42 and 42.50. You know, if those were to break, then the chart would be really broken. You'd be looking at $40, possibly a run down to that 300-day simple moving average at 38.71. Okay, let's look at the SPXL 15-minute chart. You can see how this turned bullish into the close. It got above that middle Bollinger Band. Tomorrow it'll be in play if it can stay above 42.96. That's also the mental stop loss level. You know, if it was to drop below that level and that level turn into resistance, it would be a risk to hold. It would be a signal that it's not ready to go, that this bounce into the close was a head fake. But this is how reversals start, and so it is signaling that it could possibly get a move going tomorrow. If it does, then that would be the 50 simple moving average at 43.89 would be the next target. That would be the next big level to break. Many times, keep in mind, you get a run up to that level and then it stalls out and pulls back if the downtrend continues. So we'll just have to see. This was a really big drop. There was big volume into the close. It looks like people were loading. You know, you have the bull crosses and the PSAR bull flip and the move above resistance on volume. So it's all pointing to the fact that that it looks like traders are betting on a bounce tomorrow. So we'll see if it can follow through. If it drops below 43 and it fails to hold that 43 support level, that's going to be your signal that it's not ready to go. Okay, let's look at SPY. This is the Spider S&P 500 ETF, and as you can see here, it's below 50. It's testing 20. It's the same setup. The bear cross here, and so the SPY is now below the middle Bollinger Band and the 100-day simple moving average. It needs to get above both levels. It's all about 270. If it can get back above 270, that'll signal more upside potential. If 270 turns into resistance, then you're looking at the 50-day simple moving average is the big level to hold. That's at 266.85. It needs to hold that level. If it were to drop below, that's when it could really get going to the downside and retest the bottom of this ascending support. You know, test the 200-day simple moving average at 261.75. So that's the downside risk. You know, it formed you know, you've got the symmetrical triangle pattern. You can see here this ascending support, and then you've got the descending resistance, and now it's coming back down into the descending resistance zone. And so you have the you can see here you have descending resistance, and so it was able to break above that level, and so now you've got it dropping back down. You can see where you have the ascending support and descending resistance coming to a flex point here, and it's all pointing to this, you know, 265, 266 level. And if it drops below 265, that would be a major red flag. You know, that would be a signal that the chart's really broken, and you could see more sustained downside risk. Now this would be the key level to bounce off. You know, to bounce off this 267 zone would be huge. That would be the level to bounce off and then get back above 270, and then it could head higher. Okay, if you look at the SPY 15-minute chart, you can see they loaded into the close. I mean, check out this huge volume spike. So there was big time loading into the close. You can see it was building as traders were trying to play the they were playing the bounce down here, and so it did have the pullback though. You could see that pullback, and so, you know, some traders might have locked in some gains there into the close. It's going to be all about holding that middle Bollinger Band currently at 268.72. If that level holds tomorrow, then that's going to signal upside potential and look for a run up to that 50 simple moving average at 270.60. It looks like a lot of traders loaded here. If it can hold, then you know, you can get a run back up to that level. If it were to drop below that 268.72 level, then that would signal more downside risk. So keep in mind that, you know, the chart is set up for a bounce here, but it has to hold support. It's always real risky, you know, loading on that first break above the middle Bollinger Band. You could see back here on Friday it closed above, but it failed to hold, and the downtrend continued. But look at the difference on Friday. You know, the volume was not nearly as heavy. You could see it was really building into the close here. People were loading. You know, they loaded for the bounce. You know, follow the volume, and so we'll see, you know, it looks like SPY should have a turn, but we'll see if it's sustainable. If it drops below that middle Bollinger Band, it won't be ready to go. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. I'll post the link below the video. Thank you.